The year 2025 is rapidly approaching, and with its arrival comes a critical juncture for investors across the globe. It stands poised to be a period of immense opportunity and significant risk, a time that will undoubtedly separate the prepared from the unprepared. For some, it will be a year of unprecedented financial growth, a period where their portfolios could potentially double in value. For others, however, it could become a cautionary tale of devastating losses, a time when fortunes are squandered due to impulsive actions and a lack of clear direction. The line between these two outcomes is often finer than most people realize, and honestly, it's not drawn by luck or chance. It is drawn by one simple yet profoundly powerful word: strategy. Understanding the difference between winning and losing in the financial markets of 2025 begins with abandoning the notion of gambling and embracing the principles of strategic planning. Many will enter the year hoping to strike it rich on a single hot tip or a fleeting market trend, treating their hard-earned money like a lottery ticket. This approach is not investing, it is speculation, and it is the fastest path to financial ruin. The investors who will thrive are those who approach the market not as a casino, but as a complex system that can be navigated successfully with the right map. This guide is designed to be that map, providing you with the tools and insights needed to make informed, intelligent choices. The coming year will be defined by a series of powerful global forces, from technological disruptions and inflationary pressures to geopolitical shifts that can send ripples through every sector of the economy. These are not just abstract concepts, they are tangible factors that will directly impact the value of your assets. Ignoring them is not an option for anyone serious about building long-term wealth. The key is not to fear this volatility, but to understand it, anticipate it, and position yourself to take advantage of the opportunities it creates. This requires a level of preparation that goes beyond simply picking a few popular stocks and hoping for the best. It requires a robust, adaptable strategy built on a foundation of knowledge and discipline. This essay is not just another collection of vague predictions or fleeting market hot takes. It is something far more valuable and enduring. Consider this, your new investment playbook for 2025, a comprehensive and practical guide designed to empower you regardless of your current level of experience. It will equip you with a durable framework for thinking about your money, managing risk, and identifying genuine opportunities for growth. The goal is to move you from a state of uncertainty or anxiety to one of confidence and control, ensuring you are the one writing your financial story in the year ahead. My name is Tola Johnson, and for years, I have dedicated myself to studying the most effective and intelligent ways to grow money in our rapidly changing world. My journey has not been purely academic. It has been forged in the real world, observing the triumphs and tribulations of countless individuals, navigating the complexities of modern finance. I have seen firsthand the painful consequences that unfold when people treat their investments like a gamble, chasing fleeting trends and ultimately losing more than they can afford. These experiences have solidified my conviction that financial education is not a luxury, but a necessity for anyone aspiring to achieve financial independence and security in this dynamic era. On the other side of the coin, I've had the immense privilege of helping numerous people transform their financial lives. I have guided individuals from a state of being completely clueless and overwhelmed by the world of investing to a position of profound confidence and clarity. There is nothing more rewarding than seeing someone grasp the core principles of smart investing and begin to build a future they once thought was out of reach. It is this experience, this journey from confusion to empowerment, that I am distilling for you in this guide. This is the culmination of years of research, analysis, and practical application, presented as your definitive 2025 investing blueprint. The playbook you are about to receive has been meticulously crafted to be three things: simplified, proven, and future-ready. It is simplified because I believe that the best strategies are often the ones that are easiest to understand and implement consistently. We will cut through the jargon and the noise to focus on what truly matters. It is proven because the principles it contains are not based on speculative fads but on time-tested concepts that have helped build wealth for generations. Finally, it is future-ready because it is specifically designed to address the unique challenges and opportunities that the landscape of 2025 will present, from the rise of artificial intelligence to persistent economic uncertainties. Our mission here is clear and direct: to equip you with a systematic approach that will serve as your anchor in the often stormy seas of the financial markets. While others are tossed about by waves of hype and panic, you will have a steady hand on the tiller, guided by a clear and logical plan. This is not about getting rich overnight, it is about building sustainable long-term wealth in a smart and deliberate manner. By the time you finish this guide, you will not just have a list of things to invest in, you will have a new way of thinking about your money and your future. My name is Tola Johnson, and for years I have dedicated myself to studying the most effective and intelligent ways to grow money in our rapidly changing world. My journey wasn't born in a high-powered Wall Street firm, but rather from a place of deep curiosity and a desire to understand the forces that shape our financial destinies. I've spent countless hours poring over market data, dissecting economic reports, and analyzing the strategies of the world's most successful investors. This journey has been less about chasing profits and more about demystifying a world that often feels intimidating and inaccessible to the average person. I have made it my mission to translate complex financial concepts into simple, actionable wisdom. This dedication has given me a unique perspective, one forged in the real world by observing the financial journeys of countless individuals. I have seen firsthand the painful consequences that unfold when people treat their investments like a gamble, chasing fleeting trends and meme stocks fueled by social media hype. Their stories are often heartbreaking, filled with regret and significant financial loss, a direct result of acting on emotion rather than on a well-conceived plan. These experiences solidified my conviction that financial education is not a luxury reserved for the wealthy. It is a fundamental necessity for anyone aspiring to achieve security and independence in this increasingly dynamic era. On the other side of the coin, I have had the immense privilege of helping numerous people completely transform their financial lives for the better. I have guided individuals from a state of being completely clueless and overwhelmed to a position of profound confidence and control over their future. There is nothing more rewarding than witnessing that moment of clarity when someone grasps the core principles of smart investing and begins to build a future they once thought was entirely out of reach. It proves that with the right knowledge and a disciplined approach, anyone can become a successful investor, regardless of their starting point or background. It is this experience, this journey from confusion to empowerment, that I am distilling for you in this comprehensive guide. This is not just a collection of my opinions, it is the culmination of years of rigorous research, practical application, and lessons learned. I am presenting it to you as your definitive 2025 investing blueprint. My goal is to give you the same clarity and confidence that I have helped others find, equipping you with a framework that can withstand market volatility and set you on a clear path toward achieving your most important financial goals. The playbook you are about to receive has been meticulously crafted to be three things above all else: simplified, proven, and future-ready. It is simplified because I firmly believe that the most powerful strategies are often the ones that are easiest to understand and, more importantly, to implement consistently over the long term. We will systematically cut through the confusing financial jargon and the constant noise from so-called gurus to focus only on what truly moves the needle in building wealth. Complexity is often the enemy of execution, so our approach will prioritize clarity and straightforward action at every single step of the process. Furthermore, this guide is proven because the principles it contains are not based on speculative fads or the latest get-rich-quick schemes that inevitably burn out. Instead, our framework is built upon time-tested, evidence-backed concepts that have helped create and sustain wealth for generations of disciplined investors. We will explore strategies like diversification, risk management, and long-term compounding, pillars of sound investing that have weathered countless market cycles, from recessions to bull runs. These are the enduring truths of wealth creation, adapted for the modern world, ensuring you are building on a foundation of rock, not sand. Most critically, this blueprint is future-ready. It has been specifically designed to address the unique challenges and unprecedented opportunities that the landscape of 2025 and beyond will present. We are standing at the intersection of major global shifts, from the exponential rise of artificial intelligence and its impact on every industry, to persistent inflationary pressures and an unstable geopolitical climate. This guide acknowledges these new realities and provides you with the tools to navigate them intelligently, helping you position your portfolio not just to survive, but to thrive amidst the change that is coming. Our mission here is clear and direct: to equip you with a robust, systematic approach that will serve as your unwavering anchor in the often stormy seas of the financial markets. While others are being tossed about by the volatile waves of media hype and emotional panic, you will have a steady hand on the tiller, guided by a clear, logical, and personalized plan. This guide is not about getting rich overnight. It is about building sustainable, long-term wealth in a smart and deliberate manner. By the time you finish it, you will have more than a list of assets to buy. You will possess a new way of thinking about your money, your goals, and your financial future. Let's be perfectly clear about the biggest trap waiting for aspiring investors in 2025. It's not a complex financial derivative or a hidden fee, it's the deafening roar of digital hype. Here is the hard truth. An overwhelming majority, perhaps as many as 90% of new investors, will base their decisions not on sound research or a coherent strategy, but on the fleeting trends that dominate their social media feeds. They will see a meme stock soaring on Reddit, hear about a new cryptocurrency being shilled by an influencer on TikTok, or read a sensational headline about a company that promises to change the world overnight. This constant bombardment creates a powerful illusion of easy money just waiting to be claimed. This phenomenon is what I call the siren song of hype. It's alluring, exciting, and promises incredible returns with minimal effort, drawing people in with stories of astronomical gains. The reality, however, is far more treacherous. Following these trends blindly is the equivalent of navigating a minefield without a map. For every story of someone who got lucky and cashed out at the peak, there are thousands of others who bought in at the top, only to watch their investment plummet as the hype inevitably fades. These are not investment strategies, they are speculative gambles driven by a collective fear of missing out, a powerful emotion that consistently leads to poor financial outcomes. The digital age has democratized access to financial markets, which is a wonderful development, but it has also amplified the speed and scale of misinformation and speculative frenzy. In 2025, this will be more potent than ever. Algorithms are designed to show you what is most engaging, not what is most financially prudent. This creates echo chambers where risky bets are celebrated and caution is dismissed as fear. The average person is led to believe that they are making an informed choice, when in reality, they are simply participating in a momentum trade that has no underlying fundamental value. They are chasing shadows, hoping to catch something substantial before it disappears. The investors who will lose in the coming year are those who cannot distinguish between a genuine investment opportunity and a well-marketed speculative bubble. They will jump from one hot trend to the next, accumulating losses and frustration along the way, never stopping to build a foundational understanding of what they are buying. They will mistake the noise of the crowd for a signal of wisdom, forgetting the age-old market truth that by the time an investment is popular enough to be a meme, the smart money has often already moved on. Escaping this trap requires a conscious decision to tune out the noise and focus on substance. Beyond the immediate danger of digital hype, a more subtle but equally potent trap awaits those who fail to recognize that the fundamental rules of the global economy are changing right before our eyes. It is a monumental mistake to assume that the investment strategies that worked flawlessly 5 or 10 years ago will continue to yield the same results in 2025. We are living through a period of profound disruption, and ignoring these large-scale shifts is like trying to sail using an outdated map of the world. The coastlines have moved, new currents have formed, and old safe harbors may no longer offer protection from the coming storms. One of the most significant shifts is the relentless advance of artificial intelligence. This is not just a trend affecting a handful of tech companies. It is a transformative force that is beginning to disrupt entire industries and redefine the nature of work itself. Jobs that were once considered stable are becoming vulnerable to automation, which has direct implications for corporate profits, consumer spending, and overall economic stability. Furthermore, the persistent reality of inflation, even if it moderates, has fundamentally altered the financial landscape. Money sitting idle is actively losing its purchasing power, making intelligent investing less of a choice and more of an absolute necessity for long-term security. Compounding these issues is a global economy that feels increasingly unstable and fragmented. Geopolitical tensions, supply chain vulnerabilities, and shifting trade alliances create an environment of heightened uncertainty. A conflict on one side of the world can instantly impact energy prices, shipping costs, and the availability of essential components on the other. An investor who only looks at their domestic market is missing the bigger picture. In 2025, a purely localized perspective is a significant liability. The interconnectedness of the global system means that risks and opportunities are no longer confined by national borders, and your portfolio must reflect this new reality. The investors who will fall into this trap are the ones operating with an outdated worldview. They will continue to rely on old assumptions, ignoring the clear signals that the ground is shifting beneath their feet. They might overlook the threat AI poses to their legacy stock holdings or underestimate how deeply inflation erodes their savings. They will be caught off guard by global events they didn't see coming because their focus was too narrow. Thriving in 2025 requires a proactive approach, an acknowledgement that the world is in flux and a commitment to adapting one's strategy to navigate these new and challenging economic realities successfully. Ultimately, the various traps of 2025, from the allure of hype to the challenge of economic shifts, all lead back to a single critical vulnerability: the absence of a personal system. Investing without a system is like setting sail across a vast ocean without a compass, a map, or even a destination in mind. You are completely at the mercy of the changing winds and unpredictable currents. When the seas are calm, you might feel a false sense of progress, drifting along aimlessly. But the moment a storm hits, a market downturn, a personal financial emergency, a wave of panic, you have nothing to hold on to, no framework to guide your decisions. This is precisely where most people fail. They treat investing as a series of isolated, reactive decisions rather than a cohesive long-term project. They buy a stock because they heard a good story. They sell another because they saw a scary headline. Their portfolio becomes a chaotic collection of assets acquired on impulse, with no underlying logic connecting them. There is no clear goal, no defined risk tolerance, and no strategy for how to behave during periods of volatility. This lack of structure makes them incredibly susceptible to emotional decision-making, which is the sworn enemy of successful investing. Fear and greed become their co-pilots, and that partnership almost always leads to a crash. Here is the most important sentence in this entire section. If you do not have a system, you will become a victim of someone else's system. The financial markets, the media, and the product issuers all have their own systems designed to profit from your actions. The market system is to transfer wealth from the impatient to the patient. The media system is to capture your attention through sensationalism and fear. Your only defense against these powerful external forces is to operate within your own well-defined framework. A personal investment system is your shield. It protects you from your own worst emotional impulses and the manipulative pressures of the outside world. Therefore, the most tragic losses in 2025 will not be the result of a single bad stock pick. They will be the result of a complete and total failure to plan. A system dictates what you buy, why you buy it, how much you are willing to risk, and under what conditions you will sell. It is a pre-commitment to rational behavior, made during a time of calm, that you can rely on when things get turbulent. Without this structure, you are just gambling. You are a passive participant in a game where the odds are stacked against you. Building a simple, robust system is the first and most critical step in tilting those odds firmly in your favor. To navigate the complexities of the 2025 investment landscape, you need more than just good intentions. You need a robust, reliable system. This is where our SMART framework comes into play. It's a simple, memorable structure designed to keep you grounded while others are swept away by emotion and hype. The first letter, S, stands for study trends, not hype. This is a crucial distinction that forms the bedrock of intelligent investing. Hype is the loud, frantic noise of the market, the meme stocks and flash-in-the-pan crypto coins that capture headlines for a week before fading into obscurity. It is fleeting, emotional, and almost always a trap for the uninformed investor. True trends, on the other hand, are the deep, powerful currents shaping our future over years, not days. Studying trends means looking beyond the daily market chatter to understand the fundamental shifts that are reshaping our world. Think about the long-term growth of artificial intelligence, the global transition to renewable energy, or the demographic changes driven by an aging population in many developed nations. These are not fads. They are multi-decade transformations creating entirely new industries and investment opportunities. By focusing your energy on understanding these macro trends, you position yourself to invest in the future, rather than gambling on the present. It requires patience and a willingness to learn, but it allows you to make decisions based on conviction and logic, not on a fear of missing out on the latest craze. Following this, the M in our framework stands for manage risk with diversification. This is perhaps the single most important principle for preserving your capital and ensuring your long-term survival as an investor. The old adage, "Don't put all your eggs in one basket," is cliché for a reason. It is timeless wisdom. Managing risk through diversification means spreading your investments across various asset classes, industries, and geographic regions. When one part of your portfolio is performing poorly, another part may be doing well, smoothing out your overall returns and protecting you from catastrophic losses that can occur when you are overexposed to a single company or sector. True diversification is more than just buying a few different tech stocks. It means creating a balanced portfolio that might include a mix of domestic and international stocks, government and corporate bonds, real estate through REITs, and perhaps a small, calculated allocation to alternative assets like commodities or cryptocurrencies. This approach ensures that your financial well-being is not tied to the fate of any single investment. It is your primary defense against the unforeseen events, the market crashes, the industry disruptions, the geopolitical shocks that are an inevitable part of the investment journey. It replaces anxiety with resilience, allowing you to weather storms that would wipe out a less prepared investor. With a solid foundation built on studying long-term trends and managing risk, we move to the next critical components of the SMART framework. A, for allocate using the 50-30-20 rule. This principle brings structure and discipline to how you deploy your capital, turning your broad strategy into a concrete action plan. While the 50-30-20 rule is traditionally used for personal budgeting, 50% needs, 30% wants, 20% savings, we can adapt it as a powerful baseline for asset allocation, especially for those building their portfolios. For example, you might decide to allocate 50% to core, low-risk investments like broad market index funds, which form the stable base of your portfolio. The next 30% could then be allocated to what we might call growth-oriented investments. This is where you can take on slightly more calculated risk by investing in specific trends you have studied, such as AI-driven companies, global ETFs focused on emerging markets, or innovative healthcare sectors. This portion of your portfolio is designed to generate higher returns over the long term. Finally, the remaining 20% can be split. Perhaps 10% is held for more speculative but high-potential assets like a small position in Bitcoin or Ethereum, while the other 10% is kept in cash or cash equivalents, ready to deploy during market downturns. This allocation model provides a clear, balanced structure that prevents you from being either too conservative or too reckless. This allocation strategy, however, is useless without the next letter, R, which stands for research before you react. In an era of instant information and one-click trading, the impulse to react immediately to news is stronger than ever. A stock you own drops 10% in a day, and the panic sets in. A friend tells you about a guaranteed winner, and the urge to buy becomes overwhelming. The R in SMART is your constant reminder to pause, breathe, and do your homework. Reacting is emotional, researching is logical. Before you ever click the buy or sell button, you must have a clear and rational reason for doing so, based on your own investigation, not someone else's opinion. Research doesn't mean you need to become a Wall Street analyst with complex financial models. It can be as straightforward as understanding what a company actually does to make money, looking at its long-term performance, reading its latest investor reports, and understanding its position within its industry. It means asking critical questions. Is this company profitable? Does it have a sustainable competitive advantage? Is its leadership team trustworthy? Is its valuation reasonable compared to its peers? By committing to this process, you transform yourself from a passive speculator into an active, informed owner of a business. This simple habit of researching before acting will save you from countless costly mistakes driven by fear or greed. The final, and arguably most crucial element that holds the entire system together is T for track your portfolio weekly. Investing is not a set-it-and-forget-it activity, nor is it something that requires obsessive, minute-by-minute monitoring. The key is to find a healthy, sustainable middle ground. A weekly check-in provides the perfect cadence. It is frequent enough to keep you informed and engaged with your investments, allowing you to spot any significant changes or potential issues before they escalate. At the same time, it is infrequent enough to prevent you from overreacting to the meaningless daily noise and volatility of the market, which often encourages impulsive and destructive behavior. This weekly tracking session should be a structured ritual. not a quick, anxious glance at your portfolio's total value. It is your opportunity to review your performance against your goals and to ensure your asset allocation remains in line with your strategy. For example, if a significant rally in your tech stocks has caused them to grow from 30% of your portfolio to 40%, it might be time to consider rebalancing, selling some of the winners to bring your allocation back to its target. This disciplined process forces you to systematically buy low and sell high, the very opposite of what emotional investors tend to do. Tracking your portfolio is also an essential tool for learning and improvement. Your weekly review is a chance to assess what is working and what is not. Why did a particular investment outperform the others? Was it due to a broad market trend you correctly identified, or was it just luck? Why is another investment lagging? Is there a fundamental problem with the company, or is the entire sector simply out of favor temporarily? By asking these questions consistently, you refine your understanding of the markets and become a better, more insightful investor over time. It turns your investment journey into a continuous feedback loop of action, review, and learning. Ultimately, the act of tracking your portfolio weekly is an act of accountability to your future self. It keeps you honest about your plan and disciplined in your execution. It ensures that you remain the pilot of your financial journey, actively steering according to your map, rather than becoming a passive passenger taken for a ride by the chaotic market. In 2025, when distractions and volatility will be at an all-time high, this simple, consistent habit of tracking your progress will be the anchor that keeps your strategy on course, protecting you from drift, and ensuring you are always moving deliberately toward your financial goals. Let's put the SMART framework into action by building a portfolio for 2025 that's both stable and primed for growth. The foundation? Low-cost index funds like those tracking the S&P 500. They offer instant diversification and have a proven record of outpacing most active managers. For beginners, this is the simplest, most effective way to start building wealth. Next, look to established AI leaders. Think NVIDIA or AMD, who are powering the next wave of innovation. Don't chase every AI startup. Focus on companies with real revenue and a track record of innovation. The goal combines broad market stability with targeted exposure to transformative trends. This is how you build a resilient, future-ready portfolio. Diversification doesn't stop at home. Global ETFs let you tap into growth across Asia, Latin America, and Africa, reducing your reliance on any single economy. Emerging market funds capture the rise of the global middle class and new economic powerhouses. Add real estate investment trusts, REITs, for income and further diversification. REITs let you own a slice of commercial real estate and earn steady dividends, all without buying property yourself. Whether it's logistics, warehouses, or cell towers, REITs add stability and income to your mix. Combining global ETFs and REITs broadens your portfolio's reach and resilience. This approach balances growth, income, and protection against market swings. No modern portfolio is complete without a nod to digital assets, specifically Bitcoin and Ethereum. Allocate a small portion, 1 to 5%, and use dollar-cost averaging to manage volatility. Think of Bitcoin as digital gold, Ethereum as the backbone of decentralized finance. Don't try to time the market, invest consistently, and let time work for you. Keep your crypto allocation modest to protect your core investments. Layer this with index funds, AI leaders, global ETFs, and REITs for a balanced, future-proof portfolio. The result: steady, diversified growth with a modern edge. Winning isn't just about what you buy, it's about what you avoid. Ignore social media hype and meme stocks. They're speculation, not investing. Always build an emergency fund before you invest. It's your safety net against life's surprises. Without it, you risk selling investments at the worst possible time. Don't let FOMO or online trends dictate your strategy. Stick to your plan. Protect your portfolio by preparing for the unexpected. The smartest move is often the one that keeps you in the game. Two silent threats can erode your wealth: high fees and taxes. Choose low-cost funds and understand the impact of expense ratios over time. Use tax-advantaged accounts like 401(k)s and Roth IRAs to maximize growth. Hold investments long-term to benefit from lower capital gains taxes. And never panic sell during downturns. Market dips are normal, and recovery follows. Discipline and patience are your greatest assets. Avoid these hidden pitfalls and you'll set yourself apart from most investors. All the knowledge, frameworks, and investment ideas in the world are ultimately powerless without a personalized plan to bring them to life. An investment strategy that exists only in your head is not a strategy. It's really just a wish list, vulnerable to the whims of emotion and the pressures of the moment. To truly invest smartly in 2025, you have to transform your intentions into a concrete written document. Every successful investor operates with a personal system, a clear blueprint that dictates their actions. This plan doesn't need to be complex, but it must be clear. It starts by answering a few fundamental questions about your own unique financial situation and aspirations. The first and most important of these is defining your investment goals. Why are you investing in the first place? Vague answers like to make money are just not enough. You need specific, measurable objectives. Are you investing for retirement in 30 years? For a down payment on a house in 5 years? Maybe to fund a child's education in 15 years? Each of these goals requires a different strategy, so getting crystal clear on your why is the essential first step. Once your goals are defined, the next critical component to establish is your personal risk level, or risk tolerance. This is a measure of your psychological and financial ability to withstand market fluctuations without making rash decisions. Are you someone who would lose sleep over a 15% drop in your portfolio's value, or do you view such downturns as buying opportunities? Be honest with yourself. Your risk tolerance is influenced by your personality, your financial stability, and your age. Generally, a younger investor with a long-time horizon can afford to take on more risk for potentially higher returns, while someone nearing retirement should prioritize capital preservation. Defining your risk level, whether it's conservative, moderate, or aggressive, will directly influence the types of assets you choose and how you allocate them in your portfolio. Without this self-awareness, you risk building a portfolio that is misaligned with your temperament, setting yourself up for panic and failure. Directly linked to your goals and risk tolerance is your time horizon. This is simply the length of time you expect to keep your money invested before you need to withdraw it to fund a specific goal. This factor is a powerful determinant of your investment strategy. If your time horizon is long, say 25 years or more for retirement, you can afford to weather short-term market volatility in pursuit of higher long-term growth from assets like stocks. Market downturns are less threatening when you have decades to recover. However, if your time horizon is short, for example, you need the money for a wedding in 2 years, your priority must shift dramatically toward capital preservation. In this case, you would avoid volatile assets like individual stocks and favor safer options like high-yield savings accounts or short-term bonds. Matching your investments to your time horizon is a non-negotiable rule of smart investing that prevents you from taking inappropriate risks with money you will need soon. Finally, you must determine your monthly contribution. Wealth is most often built not through a single lump sum investment, but through the disciplined, consistent habit of investing money over time. Look at your budget and determine a realistic amount you can commit to investing every single month without fail. This could be $50, $500, or $5,000. The specific amount is less important than the consistency of the habit itself. Automating this contribution, so the money is transferred from your bank account to your investment account on the same day each month, is a powerful technique. This pay-yourself-first approach ensures that you are continuously fueling your investment engine, taking advantage of dollar-cost averaging, and making progress toward your goals. This regular contribution is the lifeblood of your plan, turning your static blueprint into a dynamic, growing asset. With the foundational components of your plan defined, your goals, risk level, time horizon, and monthly contribution, the final step is to decide on your target asset mix, also known as asset allocation. This is where you translate your personal profile into a tangible portfolio structure. Your asset mix is the specific blend of different investment types you will hold, such as stocks, bonds, real estate, and alternatives. This mix should be a direct reflection of the risk level you previously identified. For instance, an aggressive investor with a long time horizon might choose an allocation of 80% in stocks, a mix of US index funds, global ETFs and AI-driven companies, and 20% in more speculative assets like cryptocurrencies. In contrast, a conservative investor might opt for a mix of 40% stocks and 60% bonds and REITs to generate income and reduce volatility. This process is about creating a deliberate balance that aligns with your specific needs. There is no single best asset allocation. There is only the best allocation for you. Using the adapted 50/30/20 rule from our SMART framework can be an excellent starting point. You could allocate 50% to your core, low-risk holdings, like an S&P 500 index fund, 30% to your growth-oriented investments, like global ETFs or specific sector funds, and 20% to a combination of more speculative plays and cash reserves. The key is to write this target allocation down. For example, 50% VOO, 20% QQQ, 10% VXUS, 10% VNQ, 5% BTC, 5% cash. This simple written statement transforms your plan from a vague idea into a clear, actionable instruction manual for your money. Once this plan is on paper, you have created your personal investment policy statement. This document is your shield and your guide. It is your defense against the emotional temptations of the market and the seductive noise of financial media. When the market is soaring and you feel the greedy urge to chase a high-flying stock not in your plan, you consult your document. When the market is crashing and you feel the fearful impulse to sell everything, you consult your document. It is your pre-commitment to rational behavior, a contract you make with your future self. It reminds you of your long-term goals and the strategy you thoughtfully designed during a moment of calm and clarity, keeping you disciplined when discipline matters most. Remember the critical warning: if you do not have a plan for your wealth, you will inadvertently become part of someone else's plan. The market, the media, and financial institutions are all systems designed to benefit from your impulsive actions. By building your own simple, personalized plan, you opt out of their game and begin playing your own, a game with rules that you set, for goals that you defined. This act of planning is the ultimate expression of taking control of your financial destiny. It is the definitive line that separates the amateur speculator from the smart, serious investor who is methodically building a future of security and freedom, one disciplined decision at a time. As we look toward the horizon of 2025, one truth becomes abundantly clear. The coming year will not be defined by luck, but by preparation. The financial markets will undoubtedly present a landscape filled with both exhilarating opportunities and significant challenges. A turbulent environment where fortunes can be made and lost with breathtaking speed. The critical difference between those who succeed and those who fail will not be access to some secret information or a single stroke of good fortune. Instead, it will be the quiet, unglamorous work of preparation, the commitment to building a system, defining a strategy, and adhering to it with unwavering discipline. The game of investing has fundamentally changed, and the advantage has shifted decisively to the individual who is prepared. The playbook laid out in this guide has been designed to give you that exact advantage. It is a system built not on complex theories or risky gambles, but on the simple, powerful principles of the SMART framework. By studying real trends instead of chasing fleeting hype, you ground your decisions in logic. By managing risk through diversification, you build a portfolio that is resilient and durable. By allocating your capital with a clear plan, researching before you react, and tracking your progress weekly, you replace emotion and impulse with structure and intention. This systematic approach is your shield against the chaos and your compass in the uncertainty that lies ahead. The most empowering realization is that smart investing is no longer a privilege reserved for the ultra-wealthy or financial insiders. The tools, knowledge, and platforms available today have democratized the process, putting the power to build long-term wealth directly into your hands. You do not need a massive starting capital or a degree in finance to become a successful investor. What you need is a clear plan, a commitment to learning, and the patience to see your strategy through. The principles we have discussed, from utilizing index funds to avoiding common mistakes, are accessible to everyone, regardless of their background or starting point. The opportunity is truly there for the taking. Therefore, as you step into 2025, do so not with apprehension, but with a sense of quiet confidence. You now possess a blueprint that most people will never have. While others are swayed by fear and greed, reacting to every market headline and social media trend, you will be operating from a position of strength and clarity. You will understand that market volatility is not just a risk to be feared, but an opportunity to be capitalized on by the prepared. This mindset shift is everything. It transforms you from a passive spectator, hoping for the best, into the deliberate architect of your own financial future. A plan, no matter how brilliant, remains a dormant collection of ideas until it is sparked to life by action. The journey to becoming a smart investor does not begin in 2025, it begins today, with the first small, deliberate step you take. The most common mistake is waiting for the perfect moment to start. waiting for the market to dip, for a pay raise to come through, or for more certainty in the world. This is a form of procrastination that can cost you dearly, as the most valuable asset you have as an investor is time. The power of compounding, where your returns begin to generate their own returns, works its magic most effectively over long periods. The sooner you start, the more powerful this force becomes. So, start small. You do not need to have everything figured out to begin. Open an investment account, make your first contribution, even if it is just a modest amount, into a broad market index fund. Automate that contribution so it happens every month without you having to think about it. This simple act of starting creates momentum. It turns an abstract goal into a tangible reality. The size of your initial investment is far less important than the establishment of the habit itself. A small, consistent stream of investments will, over time, carve a mighty river of wealth. The journey of 1,000 miles begins with a single step, and your financial journey is no different. As you move forward, your guiding principle should be consistency. There will be times when your portfolio soars, and it will be tempting to become overconfident and take on more risk than your plan allows. There will be times when your portfolio falls, and the urge to abandon your strategy and sell everything will feel overwhelming. Consistency is the antidote to both of these destructive emotions. It means sticking to your plan, making your regular contributions, and trusting in the process you thoughtfully designed. It is this relentless, steady, and disciplined approach that separates the amateurs from the true long-term winners in the world of investing. Finally, always remember the most timeless piece of investment wisdom. It is not about timing the market, but about your time in the market. No one can consistently predict the market's short-term movements. Trying to do so is a fool's errand. The key to building wealth is to remain invested through the market's inevitable ups and downs, allowing your assets the time they need to grow and compound. Let your money work for you, day and night, year after year. The path ahead is clear. The blueprint is in your hands. Start now, stay consistent, and be patient. Your future self will thank you for it.